Let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the hour. And don't forget, folks, Basil has an outstanding show here every trading day, 10 to 11 Eastern Standard Time. Also has a great newsletter, The Opening Call. Now, it's very easy to get the opening call, folks. Come over to our website at TFNN. You're going to go into newsletters. You see the opening call right on the left-hand side. You just hit the opening call. You hit subscribe. You can get the opening call for 1 month for $149. You can get it for 6 months for $695, which is a savings of $199 or 22%. You get it for a year for $1195, which is a savings of $593 or 33%. Now, all of them, folks, come with a 30-day money-back guarantee. So as you're test driving it, take your choice which one you want. If you enjoy it, great. Bottom line is that you'll end up getting charged. If it doesn't work for you, guess what? You get your money back. It's a great deal, folks. But it's not just a newsletter. Basil has 11 different archives out there. If you want to understand how to ride the Chapman Wave, okay, it's all there. It's like basically going to MIT or Harvard, Stanford. Bottom line, I'm prejudiced to Boston. You can see that. But I bet if I was born in California, I'd want to go to Stanford. Bottom line is that it's all in one package, so it's very easy to do. Basil Chapman, what's going on?
Hi, Tom. We are celebrating the second most beautiful day that we've had this year.
Oh, that's great.
Enjoy it. I wish I could bottle it and keep it until December. It's fantastic.
That's a fact. So what's it like? Is it like 75 or something, 80, or what is it?
It's about 73, something like that.
Yeah.
Perfect, but it's dry, and that's really
sweet.
Nice. Yeah.
You got to love it.
You got to love it.
Gotta love it. So, market-wise, what are we looking at here, Basil?
Okay, so there are a couple of things that you were just talking about, the different techniques that I teach when I send out my newsletter, the bunch of patterns that we're looking at. Let me just show you this here for a moment, and you'll see there's a pattern that I talk about. It looks like an H pattern. You come down sharply, and I have it in red because it rallies and then it fails, usually at about a peak A or a peak B, one peak or maybe the second peak in the arch formation.
Okay.
If it starts to come down, takes out the left side low, you can go down much deeper. The opposite here is the green, the reverse Y pattern. You can take out the left side high. But I'm looking at straight lines, arches, and cups all the time. The other pattern that I look at, and you'll see how this all is a kind of a combination of things, is this pattern here where there's a sharp rally, and then at some point the market starts to pull back and it makes lower highs and then much lower lows. And then all of a sudden it finds some support, rallies and takes out that declining trend line, and then has a chance of making what I call a Chapman Wave 1-to-1 parallel extension cup pattern or a V-shaped pattern where in the same number of bars or the same angle, it rallies sharply to test the previous left side high. So that pattern is one that subscribers to my newsletter are very familiar with. And every year, at some point, I introduce them to the same thing. I've actually taken that chart. You see the letters upside down. I reversed it. And all of a sudden, you're looking at this pattern where you come down sharply, start to make higher lows and much higher highs. Then all of a sudden, it stalls, and it comes down, and it takes out that trend line support, and you can go 1-to-1 to the downside. Now, let me show you how this is working. So we've been long the Dow since basically from March of last year at the low. We're still long, taking some profits off, but I wanted to keep it because the entry point was really so strong. I just don't know how we'd ever get back into that position if we got out of it. But this is a period that's really important because you can see the pattern that I was talking about, that cone, that falling cone formation. It worked many times to the upside. And also, I'm always looking at the fourth highest peak in the Dow. So at this peak right here, 35,091 on the 10th of May, we've got peak D, and then it drops very sharply. And right here, and this is what I was anticipating, that there'd be a rally, and then at some point, about halfway, maybe a third to a halfway from the previous top, that's 35,091 in the Dow, to the 33,587 low, the market would stall. If it stalled for a day or maybe 2 days, and now you can see this is the second day, we would know very quickly, in this case it would be by Wednesday or Thursday, if this is going to be a recovery with a V-shaped pattern, breaking this trend line of the falling axe formation, and roaring to the upside to fill the gap in the 34,600 area. if that's going to happen, it better happen very soon by Thursday, because also we've got options expiration. So this market is vulnerable to both ways this particular week. So within this context, there's that pattern I was talking about, that H pattern. I call it the dreaded H, because if it drops sharply and takes out the left side low, it can go much sharper. Well, we don't know, but look, today, and I had a technique that I call the Chapman Wave trend gauge, which gave a very low reading yesterday, which implied that even if the futures were up very sharply overnight, which they were, at some point early in the morning, there should be a negative move in the Dow, and we got exactly that today. So this is what I love to call a bifurcated market, because there are some stocks that are still doing very well, and there are other areas that are just not getting to grip with the rallies. They can't hold the rallies. So my contention here is that the Dow has to hold. If the Dow breaks 34,000 in the next couple of days, that's not going to be good at all. It has to get to the 35,600 level to say, no, we're going to at least have a rally attempt to the upside. But I think that this 35,000 touch at 35,091 millennium level is really important. I got a feeling this is going to hold as a high, at least for a little while longer. And to go with that, you were talking about the SMHs. Well, the SMHs, the semiconductors, I always believe, if you look at the charts, you'll see that over not the years, but decades, they really hold the rallies in the market for a long time if they're making new highs. And when they start to stall, you've got to be somewhat careful. So we've got the same patterns that I keep talking about. This is that falling axe, that declining cone. It keeps making the H pattern and fading. We've been short for subscribers from about 253.21. We took a little bit off at it was about 10% gain at 226. We're still short. This is a big deal. I mean, the chips, they're not going to be able to you can't bake them. It's not like you can go to, Shake Shack or something and pick up some chips. This is serious stuff. So I think it's going to impact the market in many ways. So what should move here to the upside are areas that are kind of under the radar, that aren't impacted. And not many areas aren't impacted by chips. So this is going to be very important. Here's that H pattern that we were looking at. Now the upside down pattern, the one that I was talking about, that I call the falling axe, and this is the reverse. Look, here's the dollar in the weekly chart. Comes down sharply, tries to rally, makes higher lows, much higher highs, makes a peak D, and now it's under it. So this week's going to be really important for the dollar itself. The TLT, the bonds, same pattern. Look at this. If you go to, and it's got the H pattern. So we might not be able to get lower bonds at this rate. Look, here's the pattern. You come down at 133.19 on the 18th for the TLT, make higher lows and much higher highs, make an arch formation, and now we're under it. So there are a lot of cross currents at this particular point. So I think it's putting a kind of a cap on the upside. So far, we've seen buying come in, but we've got to be real careful. So my parameters, at least I'm going to give you the number right now, that 34,000 is absolutely key to hold on a short-term basis. We're looking at this saying, be careful, everyone.
And folks, very easy to get Basil's newsletter. Come over to our website at TFNN. You're going to go into the newsletter. You're going to see the opening call. You hit that button, you are off to the races. Have a great one, Basil. Have a safe one. We look forward to the show tomorrow.